and welcome. You have tuned into Market Fatafat now. I'm Shrishti Sharma and with me is Vinny Motiwala. And viewers, this is a show that where in the next 60 minutes we're going to be highlighting all the counters that are buzzing in trade today, and we'll also tell you which are the stocks that are on our technical expert. But before that, let's have a look at what the markets are up to. So Cheryl, I beg your pardon, Vinny, 19,800 is something that Nifty is holding on to, and we are holding on to gains for Bank Nifty as well.
Absolutely, holding on to gains, today in the market as well. So resilient in terms of the market that has come in. Look at the Nifty as well, 19,800, holding about those levels of the day's highest point, but still 19,800 is what we're holding on to. This is what we had seen 3 weeks back, that 19,800 level that was there. So first time in 3 weeks that we're reaching that 19,800 level. Nifty Bank too, holding on to a bit of gains. What's doing well today is the broader markets as well. That is outperforming the benchmark indices. So look at the Nifty mid cap as well as the Nifty small cap. Both of them are holding on to good gains as well. Nifty small cap up almost 1% in trade, with gains of more than 1% in trade at one point of time as well. What is not doing well today is the Nifty PSU Bank. That was among the sectors, one of these sectors only that was actually losing in trade, and Nifty PSU Bank is down almost 0.5% in trade. Other than that, we have Nifty Realty continuing to see strong gains on that front as well. Second days of gains that we are seeing coming in for the Nifty Realty as well. Individual stocks in the Nifty Realty, whether like a Prestige Estate or a macro tech developers, are among the top gainers. That is working out well for the realty space as well. Nifty Media, other than that, also holding on to good gains as well. And when you look at it in terms of the advance decline ratio today, clearly in the favor of advances versus the decline. So yes, good turn in terms of the good move that we're seeing coming in terms of the market, holding on to gains for the second consecutive day as well, Shrishti. So interesting setup coming in from the markets.
Okay, so that's how the markets are panning out right now. But with this, let's also welcome on board Sumeet Mulchhandani on the technical side, as well as onto the research team. We have Ansh as well as Ankita joining us today onto the show. A very good afternoon to all three of you. But with this, let me kickstart taking the first stock that is in focus, and we're going to be shifting focus to Suven Pharma, as this counter is in focus because we were awaiting the open offer announcement by the company, wherein Advent International has informed that for the 26% stake holding or acquiring the stake through an open offer, they have finally announced the date, and the open offer will actually start from 20th October and that will close from 3rd of November. So that's the update coming in on Suven Pharma. This announcement was much awaited, but the price for the open offer is actually 495 rupees. So how much participation we get to see in this open offer, that will be a key to track. But 3rd November is when this open offer ends. That's the announcement on Suven Pharma, and the stock today is holding on to gains of 2.5% right now.
Okay, that is Suven Pharma, but let's also talk about an auto stock that is in focus. And now DAM Capital has come out with a note on TVS Motors today, where they're maintaining a buy on this one. They've hiked the target price for TVS Motors to 3,051 rupees per share from previous 1,875 rupees per share. Now, what the note of DAM Capital is highlighting, the structural export story starts to gain traction. They expect this would work out well for TVS Motors, as well as they expect a strong rebound in terms of the exports in the second half of the year, second half of FY24 and onwards, when we could see healthy export trends actually shaping up. They expect healthy double-digit volume growth of around 30+% in the second half of the year, and margin expansion also is something that they are looking out for as well. So today, when you look at TVS Motors as well, that is seen gains of almost 1.6% in trade as well, after DAM Capital has hiked the target price for TVS Motors. Surely keeping an eye on this one.
Well, DAM Capital is on roll, from JK Tyres to Escorts and TVS Motors today. All these auto counters are seen to be losing. But beg your pardon, let's move forward and let's shift focus to Lxmi Organics then. And Sumit, this counter is on your radar. Tell us how the chart's looking like for this one.
Hi, good afternoon to all. So yes, the stock was in the consolidation zone almost from last 6 months, from the February 22 you can see, and it was creating a base around the level of 250. But if you see from last 1 month, it is showing some bounce, and after a consolidation of around 15 days, now it is ready to bounce again. And this current week it has generated the volume also. So more than double volume is there. So we are expecting a good up move till the levels of 400. Current market price is 300. So expecting a bounce of around 20 to 25% here. So one can keep a stop loss of 250.
Okay, surely keeping an eye out on that. That is a technical level that we're keeping an eye out on, but Lxmi Organics is also focused on the back of a news flow as well. And Ansh, talk to us about that news flow that is keeping Lxmi Organics abuzz in trade today as well.
Lxmi Organic is up by over 10% in trade today. So on 5th October, company had initiated an offering of equity shares which concluded yesterday. So yesterday, company's fundraising committee approved the issuance and allotment of these equity shares. The shares were offered to qualified institutional buyers at 269.2 rupees per share, raising around 259 crores. Buyers for the issue included ICICI Prudential Mutual Funds and Society General as well. Also, if you see the chart, stock has given a sharp spike in prices on upward, snapping 3-week fall as well. In addition to that, the stock's trading volume is over 37 times as compared to the average trading volume of last 10 days.
Okay, so that's the take on, that's the news flow on Lxmi Organics. Well, let's move forward and shift focus to JSW Steel from the metal pack. Ankita, tell us what's the news flow in this one.
That's right, Shrishti. JSW Steel is in focus today. It is up more than 0.5% in trade right now because they've come up with their quarterly updates, and according to that, they have posted a 13% rise in its consolidated production to 6.41 million tons for the July to September quarter. It has produced 5.68 metric ton crude steel during the second quarter of 2022-23. However, on a quarter-on-quarter basis and on a sequential basis, the production was lower by 3%, primarily due to the scheduled shutdowns undertaken, at the Indian operations and low capacity utilization at the US Ohio, due to the market conditions. And on the back of this news flow, we see an uptick of more than 0.5% coming in on the stock.
Okay, let's move on and then talk about on the technicals Gujarat Ambuja, Sumit. What is the chart now indicating for Gujarat Ambuja exports? Where do you see it headed? Last 6 months surely has picked up action, seeing good gains as well. From here on, what is the target that you are keeping for Gujarat Ambuja? Especially that last 1 month, when I'm looking at it right now, sharp jump up that has come in the last 1 month. So what is your view now?
Yes, the stock has run up hugely. But in the last month only, we have advised the same script at 280 levels when it was breaking its zone. So currently, if you will see on the daily basis, but for just a short span of time, for 15 to 20 days, it has given a flag breakout. So we are just expecting a little bit 10 to 12% upside from here. So current market price is around 370. Keep a stop loss of 330 for the target of 412 and 426.
Okay, 412 and 426 is the target that they are keeping for Gujarat Ambuja exports. So keep an eye out on that one. That's the word coming in from Sumit. But let's move on and talk about Suntech Realty. This whole pack has been in focus for the last couple of days. So they are nonetheless, them are buzzing with the whole pack buzzing, but Suntech Realty today specifically is in focus after Jefferies has come out with a note where they're maintaining a buy on Suntech Realty with a target price of 555. Now they've hiked this target price. Is a new target price of 555. The previous target price was 415 rupees per share. What they're saying is that the improved growth, as well as they expect improved growth here, as well as governance respect, that is something they see improving as well. Government is also set to renew the push on affordable housing, where sales have actually lagged in terms of the ongoing boom in terms of housing that they've seen. So that push coming in for affordable housing will also be something that will push Suntech Realty in terms of the business as well. The portfolio is geared to the segment, and growth should be something that could accelerate further as well. And on the back of that, today Suntech Realty is holding on to 4.3% of gains as of now at 470 rupees per share.
Okay, moving on to the next counter then. Let's focus to HDFC AMC, because Citi has come up with a note on HDFC AMC where they have opened a 30-day negative catalyst watch on this particular stock, and that's why we did see that the stock managed to open the day in green but now seem to be drifting lower. What Citi is highlighting is that Q2 FY24 preview, in terms of that, the yield and the cost pressures are likely to be weighing heavy on stock like HDFC AMC. They are expecting non-linearity of AUM growth and the earnings, and see changes in the base gross TER slabs, lower yields as well as cost pressure, and overall they expect 65 basis points of quarter-on-quarter compression in the core PBT ratio of the company, and that's all these factors are definitely not on the positive side. That's why they are opening a 30-day negative catalyst wash on HDFC EMC, and that's why the stock is in focus today.
Okay, that is why the stock is in focus today. But let's move on, and moving on to what could actually, we will talk about JK Paper first. And Sumit, in terms of JK Papers, when you look at the stock move, that has nothing been something exciting in the last 1 year as well. But today, look at the stock that is up 3% just today itself. And in the last 1 year, actually, it's managed only to gain 5%. So JK Paper on the charts, is today's move an indication that we could see a run-up coming in for JK Paper?
Today's stock once touched the level of 408. So we are just waiting for the levels of 400 to 405 zone, because it is a strong resistance zone. The same strong resistance is maintaining from February 2023. February 23. So we are just waiting for on the closing basis. So if it is doing this, a flag and pole in the daily also, and a cup and handle breakout will be also there. If you draw a weekly chart from its high, that was made in August 22. So trendline breakout also will be there. So all the parameters according to the technical, it will give a breakout. So just wait for the levels of 400. Above the 400, we are expecting the new high till the levels of 460 here.
The view coming in from Sumit on JK Paper, but in a move that could actually pave way for the lithium mining in the country, sources say that the cabinet has actually approved royalty rates on critical minerals. Now, to get more details on this, what will it mean? Prakash is joining in with us to give us those details. Prakash, take us through what are these details that have come in.
The Indian cabinet meeting has just concluded, and we are learning from our sources that the cabinet has approved royalty rates for three categories of important, critical minerals. First one is lithium. The Indian cabinet has decided to fix royalty on lithium. That would be 3%. That would be 3% on niobium as well, and 1% for other minerals. So these three categories are there, which is part of critical minerals. Indian cabinet has decided royalty rates for these critical minerals. So it's an important development coming in, especially in the context of lithium mining in the country, which is going to happen first time in the history. And two blocks have been identified that will go in the mining in first tranche. And before that, Indian cabinet has decided to fix mineral royalty rates on these important critical minerals. As you are aware that these minerals like lithium, niobium, and other critical minerals have already been delisted from atomic minerals, category of atomic minerals, which means that the royalty rates have been reduced from 12%, which is conventional rate, from 3%, which is very important and a relief for the industry, as it will also enable private companies to come forward and involve in lithium mining in the country. So it's an important development coming in. Even Cabinet has approved this proposal submitted by Ministry of Mines, and sources are informing us. And short while from here now, Indian Minister of INB is going to hold an important press conference, and official announcement would be made. Back to you.
Well, thank you so much, Prakash, for getting us all those details. So that's the royalty coming in on the lithium ion production, and that's something that India is looking forward to. Two particular mines have already been discovered for the lithium ion mining. But with this, viewers, let's move on to the Market Fatafat edition of highlighting all the counters that are buzzing and shifting focus to IT bellwether TCS, where the company will be declaring its result, and the buyback announcement is in focus. Ankita, tell us, what is the street penciling in terms of the Q2 earnings?
That's correct, Shrishti. IT bellwether TCS is all set to report its quarter earnings today. And in terms of what the street is penciling in, well, in terms of dollar revenue terms, we are expecting 7,270 million odd dollars versus 7,226 million, which is a marginal uptick of 0.6%. In terms of rupee revenue, we are expecting 60,160 crores versus 59,381 crores, which is an uptick of 1.3%, and an EBITDA margin uptick of 40 basis points, and the PAT is likely to remain flat. Now, the most important thing here is to watch out for the management's comment the strategy transition under the new CEO, the incremental demand sentiment, the demand trends in BFSI, US and UK, and the deal pipelines, and of course the most important thing, like you mentioned, Shrishti, is the deal is the share buyback that announcement that the entire street is waiting and watching out for. So on the back of that, TCS is going to remain in focus today.
In focus, earnings plus buyback. Let's watch out for those numbers over there as well. But let's move on and talk about First Solutions on the technical front. And Sumit, firstly, when you look at 6 months, what a strong move, 46% return. But let's zoom in and talk about the last 1 month, because that's when the performance of the stock has been quite subdued. So now on, what is the indication in terms of the charts that you're getting for First Source Solution? Could we expect this subdued move that we saw in the last month to actually continue and the stock will remain range bound, or maybe a run up is what is in the charts?
Yes, from the levels of 120 to 180, almost 170, sorry. So the stock gave a good return in the last few months. Now after a consolidation, if you will see just a single candle of 12th of September, so it is in the zone of 155 to 170. But if you will see from the last 2 days, the volumes are generating slowly. And today at one time it was up by almost 4 to 5%. So we are just waiting for the levels of 170 to cross. So above the 170, we are expecting the target of 188 and 200. So one can keep a stop loss of 188 here.
Okay, those are the levels to watch out for when it comes to First Source. But one such stock that is seeing seller gains today in the large cap space, that is Tata Chemicals. Ansh, take us through the news flow surrounding Tata Chemicals and why the move today.
So Tata Chemical is up 2% in trade today. But first, let's take a closer look at the chemical space first. Many chemicals have maintained stable prices on a month-on-month basis. Certain chemicals are showing price recovery due to domestic demand, reduced Chinese dumping, rising crude oil prices, and expectation of Chinese stimulus measures. As per our channel check, it is anticipated that there might be a price hike for soda ash. Tata Chemicals had last revised soda ash prices on 2nd August, decreasing it from 32,300 to 30,500 per metric ton. It is expected that the domestic soda ash prices will align with China's pricing trend. Also, if you see the charts, stock seems to have given a breakout from downward sloping resistance trend line. In addition to that, stock's trading volume is over 6 times than the average trading volume of last 10 days.
Okay, that's the word coming in on Tata Chemicals. But let's talk about RIS India then on the charts and all. When you look at it, Sumit, last 6 months or last 1 year, nothing exciting in terms of RIS India. Now, what are the charts indicating for RIS India? Where do you see it headed from here on? Do you see this muted consolidation maybe something that could continue, or a rally is what we should expect?
From the levels of 240, it has fallen till the levels of 200. But right now the stock is taking the support of 100 and 200 moving average. And it has given a perfect bounce also in today's session. Right now the 4% upside is there. So it is ready for a W-shaped recovery we are expecting. So one can make a fresh position here at the 220 level. Keep a stop loss of 205, that is the previous swing low. And expecting the targets of 235 and 240 levels again.
Okay, let's move on and talk about the next stock that is in focus today. We have Bank of Baroda that is in focus after you've seen the shares actually drop as much as 2% in early trade. Why is that so? Because what the company announced that Reserve Bank of India has ordered it to not sign up any new customers using its mobile application on the Bank of Baroda BOP World app. Now, because of this, maybe we could see some bit subduedness in terms of customer acquisition. That is what Citi is highlighting in its note as well. And in the short term, maybe there could be some issues on that front as well, because digital also had a lot of acquisitions coming in terms of new customers, as well as a lot of personal loans were made digitally as well. So that is something that could impact them as well. The bank did give a bit of a clarification, but nothing that excited the street in that front. And we are seeing pressure coming in on Bank of Baroda because of that. And as of now, the stock continues to see a decline, down 3.2% in trade.
Okay, Bank of Baroda on the back of negative news flow. The stock is under pressure of over 3% today. But Sumit, specifically on the charts, no recovery since morning losses. And onto the charts, are you spotting any sort of a breakdown for Bank of Baroda? Can we see further selling pressure in this particular counter?
Yes, if you will see the chart structure also from the stock has made the high on 18th of September. Afterwards, it was in the consolidation zone and no positivity was there. So we are just waiting the low to break of 21st of September. So on the closing basis, if we are getting the close below the 207 level, so we are expecting a 5 to 8% downside here. So keep a stop loss if anyone is holding as a delivery also. So can book partially and can make a re-entry again at the lower levels that we are expecting near the 194 and 190 levels. So to save money is to earn money. So better to keep partial booking here.
Okay, let's move on and also go across to Ankur Mishra, who's in conversation with Sanjeev Puri of ITC and listening to what they are having and what is the chat that's going on there.
CII is privileged to be associated as the national partner for the 10th Vibrant Gujarat Summit. And CII has been working very closely with the government of Gujarat on many areas on an ongoing basis. And we are privileged to be contributing to the growth of vibrant Gujarat.
Right. Second question will be there on the kind of atmosphere which has been there in the summit, because last year it could not happen because of the COVID. This year, as far as investment is concerned, is there something which there is a plan from CII side, and if you can enlighten that?
Well, the Vibrant Gujarat Summit is a very powerful platform, not only for networking and knowledge, but also showcasing the strengths of the state, showcasing the strengths of India. And real time there's a strength of science. Now today, if you look at today's context, domestic and global, I think there's a very positive both these factors. CII survey shows that capacity utilization has been improving from 35% upward, and that augurs well for investment. The macros also good, corporate and the financial sector balance sheets good, corporate income tax has been recognized over time. So all these are favorable factors for investment. And Gujarat has tremendous strengths. I would expect a lot of it to flow here, and it's already happening. A lot of investments are going this way.
That was the top boss of ITC in an exclusive conversation. But let's move forward and let's shift focus to Nazara Technologies, and that's the next stock in Market Fatafat, where this particular counter is in focus. Why so? Because SBI Mutual Fund has acquired a stake of 7.8% in the company, and that's as per the filing, where now the stake of SBI Mutual Fund stands at 8.04% in this particular company. And why we are highlighting this is specifically because Nazara Technologies has been in the focus, has been getting investments from different investors as well. Recently, you must remember that the company said that 100 crores of investment was done by Zerodha co-founder Nikhil Kamat, and we have seen this particular counter being in focus, and in the past 6 months, if you will see, the stock has already given a return of 55% and not very far from its 52-week high levels as well. So that's why Nazara Technologies specifically in focus today, because now SBI Mutual Fund has gone ahead and acquired 7.8% stake in the company.
Let's move on and talk about APL Apollo then. And Sumit, in the last 6 months, the stock has managed to give almost a 40% return. Do you think at the current levels it is still a buy, or should one actually start booking out profits now for APL Apollo?
No, after making a recent high, it has just taken the support of 38.2 according to the FIBO levels. And if you will see on the lower time frame than daily, today it is giving the sustainable close. So we are expecting a fresh upside here. So if you draw a symmetrical triangle break levels here, so it has given the breakout also. So expecting the new levels, new highs till the levels of 1876 and 1973. So keep a stop loss of 1550 here.
Okay, but with this, viewers, it's time to slip into a very short break. But before we go, let's shift focus to the world of auto and take a look at the stunning visuals coming in of the Maybach Vision 6 concept car, which has been unveiled in India today by Mercedes, and this makes it one of the longest concept cars the company has ever made.